What is up, investors, and welcome back to the Everything Crypto Show. I'm your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, we are back today with another very important episode as on-chain data shows us that institutions are buying crypto at record levels that we have not seen in almost 2 years' time. We got Swift having a massive breakthrough here with CBDCs and why this is incredibly bullish for Quant. And last but not least, we got to talk about Crypto.com continuing to really build out that payment infrastructure as they aim to become that one-stop shop for all of your crypto needs. So on that note, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Thursday, everyone. I did just want to ask that if you've not yet hit that sub and like button, please consider doing so and joining the Everything Crypto Squad, as the number one goal of this channel is to bring you all of the most important news that you need to know on a daily basis. Now, with that out of the way, we're going to hop right in here with the question of the day. And today, this is kind of like half a statement, but half a question. And I said, I cannot think of any alternative investments that present as good of a risk to reward ratio right now as Bitcoin at 20,000 and Ethereum at 1,300. In my personal opinion, crypto is the number one investment vehicle currently from any market, and that includes stocks, real estate, commodities, or collectibles. And my question today is, do you agree or disagree with this statement? Let me know in the YouTube comments down below. And I'm not asking you guys this question for nothing. I do just kind of want to hear what you guys think about this, and we are going to talk about this in more detail tomorrow. As suffice to say, I've made a ton of changes to my overall portfolio, and that includes all investments over the past couple of days, as I really do see the highest risk to reward ratio right now in the crypto market, and it's not even close in my opinion. So very curious to hear what you guys have to say about that. And with that, we're going to hop right into the charts as we always do, starting off with Bitcoin. And we've been keeping a very close eye on Bitcoin on the daily here, as we have been talking about the fact that it's basically coming up on a massive inflection point. So zooming in here, you're going to notice that we have created what was the fourth breakdown here for Bitcoin. So you can see we made bear flag number 1, bear flag number 2, bear flag number 3, and then number 4. And this has been a very consistent pattern for Bitcoin throughout this bear market. Now, the thing that does make this different from the rest is that Bitcoin is coming up on a major inflection point right now. And as you can see, while it is respecting this uptrending channel at the moment, it is coming up on the most important level of resistance at the entire chart, in my opinion. And that sits right at $20,000, the previous 2018 all-time high. So Bitcoin can really only do one of two things here. The first thing is that it breaks down out of this uptrending channel once again. It cannot break above 20,000, in which case we come back to retest the June lows, in my opinion, which would create for a very juicy buying opportunity. However, we have been saying that I highly suspect it will go the opposite way, and instead we will break above 20,000. And if we do, I think we are going to make a clean run all the way up to 22.3K, which is the next level of resistance and still presents an upside of about 10% from where we are currently at Bitcoin. And the reason I do believe that this is sort of the beginning of the accumulation phase and a potential reversal is because going above this $20,000 level is very, very good for market sentiment. And on top of that, we know that historically Q4 does tend to be very bullish for crypto, especially the Q4 of previous bear markets. Generally speaking, October, November, and December do tend to be very bullish for crypto, as the bear markets do tend to begin around the beginning of a calendar year or the end of the previous calendar year. So you got to figure that after about a year of selling, after pummeling Bitcoin down 70% from its all-time high, Ethereum closer to 80%, that eventually people are going to feel confident stepping in at these levels that we really have not seen since the previous all-time highs in 2018. So definitely something to keep in mind there when it comes to Bitcoin. I do still believe we are in for a green month of October, and we have been trading accordingly to this thesis. Now moving on to Ethereum here, which in my opinion sits in a very similar situation to Bitcoin, sitting at a big inflection point where really one of two things is bound to happen. Either we break below this 200-week moving average, in which case Ethereum probably comes back down to the low $1,000 range. But what I think is more likely, especially given the fact that Bitcoin looks like it is about to break out, I think that Ethereum also breaks out here above its 2018 all-time high of 1,400, and we make a clean run all the way back up to 1,730, which does present upside of about 20% from current levels. So once again, definitely looking for a green month in October based on the technicals. However, the one thing that we do need to keep in mind is there are some big things coming up this week. And we're going to mention this right off the bat because obviously I do not want you guys to be caught off guard. I want you guys to be prepared for what is to come. And the first thing that we do need to keep in mind is that on Friday, there is going to be a U.S. jobs report. Now, we actually want to see a poor jobs report here. We do not want to see a strong jobs report here because a strong report would pretty much give the Labor Department and policymakers a reason to not back off. And Bitcoin, which often trades like a risky asset similar to stocks, might remain under pressure if that was the case. We would actually like to see a weakening jobs report so that the Federal Reserve could potentially soon pivot to a softer stance on monetary policy. And in my opinion, that would be very bullish for the markets if we did begin to once again see a dovish Fed. So I definitely do think that we want to see a weak jobs report here, ironically, as if we see a strong one, they are probably going to hammer down on the market. They do not want to see rising jobs in an environment when they are trying to crush demand. They're trying to crush inflation. So we need to see, or rather, we need the Fed to think that what they've been doing has been working, that all of these rate hikes have been causing the economic slowdown that they have been looking for, and they may potentially be ready to pivot and turn more dovish, as maybe they'll feel like they've done enough. And I think they already have, honestly. I think this year has shown us the Fed really has no idea what they're doing. They went from handing out stimulus in Q1 to engaging in quantitative tightening the very same summer. And I think now they have been over aggressive with the rate hikes, pretty much to overcompensate for the lack of monetary policy that they had in place before. So definitely keeping all eyes on this job report. And then the second thing we are keeping an eye on here really is more of a black swan event, is the fact that both Credit Suisse and Deutsche Bank are at risk of actually potentially defaulting. And the reason this is potentially very bad is that in 2008, the Lehman Brothers were worth $600 billion when they crashed and took the economy down with them. Credit Suisse and Deutsche Bank are worth $2,800 billion. This is 4.6 times more in assets under management than Lehman Brothers. So suffice to say that if these two banks did collapse, that would mean a lot of trouble for the overall market. Obviously, oddly enough, that is incredibly bullish for Bitcoin because it does show you the necessity for some sort of alternative money. However, given the fact that the market this year has been a lot more macro-driven than micro-driven, you better bet that if these banks do default, we will see a massive sell-off in the markets. And it does, in fact, look like Credit Suisse's credit default swaps have been pricing this in. They have hit the highest level since 2008, and this was on October 2nd. After October 2nd, they actually went up here to about 500 on their credit default swaps, and that is effectively double of where it was at in 2008. So in my opinion, these credit default swaps would not be hitting such ridiculous levels, almost double that of the 2008 crisis, if there was not a high chance that they were actually going to default. And the thing here is that even without an underlying issue, such a rumor can quickly become a self-fulfilling prophecy if panicking clients start to withdraw their money. So this is the black swan event that we are keeping our eye on. But if this is actually just a rumor, if Credit Suisse and Deutsche Bank do not default, then yes, I do still think we are in for a very, very good Q4. And if they do default, you better believe we are going to act very, very quickly in placing some shorts. That way we are set to really benefit regardless of which way this does go. So now we're going to hop into the Bitcoin news here. And starting off here, I think it's very important the fact that we've already been in this bear market for over a year. If you are still paying attention, you are an absolute champion. You are going to make it. And this is just a friendly reminder of exactly why we are here for the long run. Because exactly 13 years ago, the price of Bitcoin topped $0 for the first time in history. You could buy 1,300 Bitcoin for $1 American 13 years ago. That is insane. That is insane to think about. And honestly, you guys might not think it now, but in 10 years, the fact that you could buy one Bitcoin for 20,000 American, I think is going to seem like an absolute bargain. So if you do have that long-term perspective, if you are a crypto maxi, and if you believe in the future of Bitcoin and the crypto industry as a whole, think about what it'll sound like in 10 years to say that you had the opportunity to buy Bitcoin at 20,000. And in my opinion, in 10 years' time, Bitcoin will easily be trading in a six-figure range. So that is definitely something that I do believe is inevitable just based on how Bitcoin is programmed and based on the insane levels of adoption that we have been seeing from these institutions and these big players. Now, speaking of big players, we have to talk about Bitcoin miners. We have been covering Bitcoin miners a lot, as obviously they do have a big impact on the price of Bitcoin. And over this past year, they have had a negative impact on the Bitcoin price action, as essentially what happened here is miners have been getting absolutely destroyed on two different sides. The first side is that the actual price of Bitcoin has been tanking, meaning that all the Bitcoin that they are mining is worth less in USD. And secondly, they are getting destroyed by the rising energy costs, which means that it costs them more to mine Bitcoin. The Bitcoin they are mining is less profitable, and that is clearly reflected here in the miner revenue chart that is on a quarter-over-quarter basis. You can see here that it topped out at 4.9 billion in Q4 of 2021, then in Q1 of 2022 down to 3.5, and then down to 2.7 in Q2, and then down to 1.3 in Q3. So a massive decline here, declining 28% and 22% respectively in terms of that quarterly revenue in Q1 and Q2. So definitely not a very good look for the miners. But interestingly enough, what you guys are going to notice here is that Bitcoin has once again hit a new all-time high in terms of the total hash rate. And effectively what this means is that more and more miners are competing to validate this network and actually contribute blocks to the network to get Bitcoin as a reward. Now, why would they be doing this when clearly their revenue has been getting absolutely destroyed? And we also covered yesterday that Bitcoin miners actually reduced their selling pressure on Bitcoin by 50% over the previous month. So effectively, we're seeing that miners have stopped selling their Bitcoin at the record levels that they were before, and the hash rate continues to soar to new all-time highs, which means that the mining industry is just getting more and more competitive. And what this signals to me is that miners are really beginning to take that long-term perspective and actually also signal the beginning of an accumulation phase and of a reversal. The miners cutting their selling pressure by 50% is going to be a massive contributor to actually sparking the next bull run, as that is a ton of selling pressure taken off the markets. I believe it's to the tune of about 900 Bitcoin per day that can be mined. So to say that now miners have reduced their selling pressure by 50%, I do think this will continue to actually increase in the coming months, and eventually we might actually see miners become net accumulators of Bitcoin once again to really prepare themselves for the next bull run. I think that for the miners that can hang in here and actually prevent themselves from selling that Bitcoin and just holding on to it, first of all, it's going to benefit the crypto market as a whole, as this will help Bitcoin really have a much easier time moving back to the upside, which has been a massive hindrance for Bitcoin in this bear market. You got to think that pockets were already tight given the macro situation, and then on top of this, we had Bitcoin miners selling at every opportunity they had. No wonder it was so difficult for Bitcoin to make any sort of meaningful move to the upside, and this could definitely be the signal that that is changing. But the fact that the total hash rate is ripping to new all-time highs, in my opinion, is very bullish, and it shows you that regardless of what miners have been doing over this past year to stay afloat, they are still incredibly bullish on Bitcoin. And it is not just miners that are bullish on Bitcoin, as institutions have been buying at record levels here. And one crypto analyst says that Bitcoin may have hit a once-in-a-lifetime bottom because of a unique mix of macro events, and that this current bottom presents a buying opportunity for investors with a long-term time horizon. So basically what he's referring to here is the fact that we had very unique conditions that probably will never repeat themselves again. So first, the economy got completely shut down due to the global situation in 2020, and then because of the fiscal policy, we saw super inflationary environment, and that sequence of events is on its own just so unfathomable that realistically speaking, we may only get one in our lifetime. Therefore, it also presents an opportunity, especially if you can stomach some drawdown. So what he's saying to me here is that Bitcoin could potentially go lower, but if you have a long-term perspective, picking up Bitcoin at 20,000, I honestly think he's saying what I was saying at the beginning of the video, that this is some of the best risk-reward ratio you can find across any investment vehicle. A Fidelity spokesperson also said they have continued to see client demand for exposure to digital assets going beyond Bitcoin. We did talk about how they now have a $5 million ETH purchase following a $62 million fundraiser for their Wise Origin Bitcoin Index Fund. And it all started when quantitative digital asset trading firm Cambrian Asset Management bought $20 million worth of Bitcoin and Ethereum for investors. So this, along with more fundraising, marks the first time in 2 years that institutional investors have bought almost $1 billion in crypto in a fortnight. And we are not talking about that video game that all of your kids probably play. So effectively, what we're saying here is that big money is once again getting very comfortable getting back into crypto, and you want to be watching big money, okay? Because they do in fact move the markets. So this shows you a ton of confidence and investor sentiment. And the other thing here is that with these institutional investors, they are buying Bitcoin to offer it to their clients. They are not traders. They are not penny flippers. I'm sure some of them are manipulating the market through shorts and longs, but if you see them buying spot Bitcoin, that is most likely to offer it to clients, which means it is not going anywhere in my opinion. So definitely something to keep in mind, that big money is entering the space. And they are in fact predicting that Bitcoin will outperform other assets when the economic tide turns. So Mike McGlone, a senior commodity strategist at Bloomberg Intelligence, sees the two cryptocurrencies outperforming other assets when the economy does return to bull territory. So for majority of 2022, Bitcoin has traded in correlation with high beta tech stocks. However, most of its downside volatility was experienced in June, while its Q3 performance was remarkably stable compared to other commodities and assets. Bloomberg claims here that this provides the potential for Bitcoin to transition into a risk-off asset in this year's final quarter. And I do in fact believe that eventually we will see the beginning of this decouping phase in this bear market leading into the next bull run. And I think that the first major indicator that Bitcoin could potentially be shifting to a risk-off asset is the fact that on the day that both the euro and the UK pound were collapsing, we saw massive inflows of volume from the Bitcoin to euro trading pair and the Bitcoin to GBP trading pair. So regardless of what people say, whether they claim they see Bitcoin as an inflation hedge or not, the on-chain data does not lie. And the matter of fact is that when people see their currencies dissolving and becoming worth less and less, that people do quickly flock to Bitcoin. And I definitely believe that this will become an even bigger narrative with time. Now, he also does talk about Ethereum, saying it is currently trapped in a cage, quote unquote, between 1,000 and 2,000, but nonetheless also outperformed the NASDAQ 100 in Q3. And I do also think that the merge may mark an inflection point of Ethereum beating the NASDAQ when it declines, as big activity for Ethereum does mean deflationary. So effectively, Bitcoin and Ethereum are both somewhat deflationary, but really in separate ways. So Bitcoin is not per se deflationary. Rather, it has a controlled inflation, and you know exactly how much Bitcoin will exist. That is 21 million, and that will always be the case. No more Bitcoin will come into existence, as opposed to fiat dollars, which are basically infinite in their supply. And then Ethereum here, depending on the amount of network activity, can actually flip deflationary if EIP 1559 is burning more ETH than is actually being minted through proof of stake. And speaking of Ethereum, we're now going to move on to Ethereum here, and there's really not much news when it comes to ETH. I do just want to give you guys an update on how it has been performing since the merge, and surprise, surprise, things are going exactly as expected. We have minted 11.3k Ethereum since the merge has gone live, but had we stayed under proof of stake, we would be up 258.6 1,000 Ethereum. So since the merge has gone live, if we were under proof of work, we would have actually already been inflationary on Ethereum by 3.76%, and currently we are only inflationary by 0.16% year over year. Once again, keep in mind this is in a bear market with a ton of decreased network activity, and as soon as we do flip to 15.5 or 16 on this gas meter, Ethereum will effectively become deflationary, and that's when I think we see this chart start to really move to the downside, and as people begin to realize the power of EIP 1559 on the tokenomics, I think that's when we'll see a lot more institutional and retail buying of Ethereum. And really, the long-term thesis now for ETH after the merge is a lot more simple. If you believe in the future of ETH, if you believe in a lot more activity in the network, that means you believe there is going to be more transactions, more gas fees to be paid, in which case EIP 1559 should continue to burn more and more Ethereum as time goes on, effectively making it even more deflationary. And this is why it is referred to as ultrasound money right here on the homepage. And I really do think that's the case. If Bitcoin is computer-generated money, Ethereum is ultrasound money. I think both of these are going to be very important to the future of finance, and the traditional system is going to be shook. That is why they are, in fact, trying to play catch-up here, as you can see through Swift, as their CBDC experiment has reached a major breakthrough. So they said here the results showed that CBDCs can be rapidly deployed at scale to facilitate trade and investment between more than 200 countries and territories around the world. Now, on top of this, around 90% of the world's central banks are now exploring CBDCs, and globally, 9 out of 10 central banks are exploring digital currencies. So this is very, very bullish for a specific crypto project that we have been talking a ton about on this channel in the bear market, and that is none other than Quant themselves. So we do believe that crypto is going to become very centralized in the next bull run, that in fact is going to be one of the key themes of the next bull run, and Quant is set to be a massive beneficiary of this centralization. So clearly Swift is very, very keen on getting their hands on CBDCs. We also know that that Swift is adopting the ISO 222 protocol, which is a standard for electronic data interchange between financial services in the payment industry. Who is ISO certified? Oh, that would be Quant. Now, we also know that the CBOS conference is coming up in Amsterdam on the 10th to 13th of October 2022. And what is that? It is a premier financial services event organized by Swift. Who is attending? Guess who? Quant is attending CBOS. Now, let's even take a look at some of the banks that have been working with Swift for actually testing the full-scale launch of CBDCs, according to Swift, and that includes HSBC as well as Wells Fargo. And what do you know? If we take a look at some of the Quant partners here, you're going to notice both HSBC and Wells Fargo on this list as well, really along with a ton of other heavy hitters, including JP Morgan, Qualcomm. And you can see here that Quant is already at the core of the second biggest payment infrastructure in the world, and that is SIA, that does have 580 banks and 19 central banks under its umbrella. And after SIA does merge with Nexi, they're going to have 1,000 plus more banks under their umbrella as well. Not to mention the second biggest software company in the world in the form of Oracle, with 430,000 clients, openly saying they integrated Overledger for multiple clients and growing fast. And last but not least, the Latin American dollar across 12 countries with MIT, Inter-American Development Bank owned by 48 countries. And the Latin American dollar across 12 countries is being built out by LAC Chain, who is once again partnered with Quant and is in fact a finalist for the 2022 Web3 and Blockchain Transformation Awards. So tons of companies here that Quant is very deep rooted in are now being brought to the surface, and that is why we have been saying for a long time, I think Quant is a massive sleeper, that centralization is inevitable, and Quant is essentially a bet on the centralization of crypto as a whole. So I've been saying it for, a little while now, and I'm going to keep saying it again. This is going to be a top 10 project in my opinion, even in the upcoming bull run. I think centralization is going to be a key theme, and that Quant is dead smack in the center of it, really ready to benefit from that. Now, speaking of centralization, another project here that I think is going to really benefit not only from centralization, but also just the widespread adoption of crypto is Crypto.com and therefore CROcoin. And we have seen two massive pieces of news in terms of platform upgrades to Crypto.com. And the first one here is that Apple Pay and Google Pay are now live in Canada. We also know that a couple months back, Crypto.com actually made it possible to instantly purchase crypto through the app with Apple Pay and Google Pay. And now they've effectively done the opposite, where you can upload your Visa to Apple and Google Pay and use it to purchase everyday things. So very, very bullish. This vertical integration between Crypto.com, between Apple and Google Pay, I think is just another step forward to really putting Crypto.com at the forefront of wallets all across the world. I really do believe that they are set to be very big beneficiaries from onboarding new customers in the next bull run. I think they easily hit 100 million customers within the next bull cycle whenever that happens. And if you take into account the current float on CRO that is under 24 billion, that is not a lot of CRO to go around for people's wallets. So definitely something to keep in mind here. And I think it's pretty ironic that they have been integrating so much with Apple Pay, just with Apple in general, because we often compare Crypto.com to Apple. The thing about Apple is, listen, they might not make the best products. I mean, debatable. They make very good stuff. But the point being is they have a very sticky ecosystem. They have their iPhone, and then they have their iPods, and then they have their AirPods, and then they have their MacBooks, and they all interconnect with each other. And I really see Crypto.com as being no different with the main app, with the DeFi wallet, with the NFT platform, with the exchange that is coming to the States. They're really just building out the infrastructure to be a very, very sticky household name, and I do see them as pretty much the Apple of the crypto industry. So very bullish there. I am a fan of this move. And second, they are also building out the infrastructure for the next wave of crypto adoption with Crypto.com Pay, as merchants can now receive payouts in USD, Euro, and Australian dollars. So they're already integrated here with Shopify, WooCommerce, and other e-commerce sites, and this is effectively allowing people to cash out on these websites with crypto. So not only can you use your Visa for physical purchases, but now you can also use crypto through Crypto.com Pay to actually make your online purchases with no gas fees associated, as that is originally what the Crypto.org chain was made for, was this actual payment infrastructure. So they are using Crypto.org for the centralized payment structure and using the Cronos chain to build up the more decentralized application side of things. Once again, this is why I remain bullish on CRO and on the team behind Crypto.com and Cronos, because I think they are taking all of the necessary steps to really be right in front of everybody's face when the next bull run does resume. Definitely something that I do think they are very, very good at indeed. Now, we're going to end this off talking about Celsius, and this is the perfect example of when you have a team that does not give a crap about their platform or their customers, unlike Crypto.com. And the first thing here is we saw some news come out that Celsius founder Alex Mashinsky withdrew $10 million before freezing everyone's accounts to pay his taxes. I mean, this is not a shocker. I think this guy, I'm sorry to say it, but based on what he's done, complete scumbag, taking people's money, taking funds from the actual professional trading team at Celsius and taking them into his own hands, losing his customers a bunch of money. And are you surprised whatsoever to hear now that he withdrew $10 million just a couple of days before freezing everybody's accounts? That is absolutely ridiculous. And we've been saying it from day one that this team does not seem like a team that is here to really get their customers their money back, unlike Voyager, right? So Voyager also was in a very similar situation to Celsius, but I was a much bigger fan of the way Voyager actually handled themselves. It seemed like they weren't putting their customers first, whereas with Celsius, it seems like they are just trying to redirect as much of the blame as possible. We can also see here that their co-founder, Daniel Leon, has resigned just a couple of weeks after Alex Mashinsky resigned himself. So their team is just, they don't want anything to do with it anymore. They're just trying to wash their hands of Celsius instead of actually taking responsibility for their actions. And this does lead us to the final piece of news, that there is finally an auction date for insolvent Celsius Networks assets. So as the team is crumbling, pretty much giving up on Celsius, the final bid deadline for Celsius will be on October 17th at 4 p.m. This means that pretty much before the end of October, we should see some sort of announcement of who will be acquiring Celsius assets. Obviously, I think FTX is going to be all over this. I think Binance is also going to be all over this. I would love to see Crypto.com come out of left field here and just make a massive bid for these assets, especially because FTX was successful on the Voyager bid. I think that if Crypto.com could make a successful bid here for Celsius, that it really would once again give them that competitive edge compared to FTX. I don't want FTX to win this bid as well, because then they are going to acquire a ton of customers, and that could mean some trouble for the long-term growth for Crypto.com. However, I think they're just taking different approaches here, where Sam Bankman-Fried is trying to actually acquire customers through these bankrupt crypto lenders, where Crypto.com is more so doing it through infrastructure and advertisement. So very interesting to see how this will play out. But once again, I don't really care what happens to Celsius or the team members. I just want everybody to get the funds back that they rightfully deserve. And it does seem that after this auction, we may be one step closer to actually seeing this rolled out. So on that note, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the comments down below so you can claim that champion status. I hope you are all having an amazing Thursday, and I hope to catch you in the next one. Peace out for now.